Very good morning, good afternoon. Hey, Mark, good morning. Hey, TM, good to see you. Stephen, Suk, hope everybody's doing well. I see euro dollar hit target yesterday. Did you grab that one, TM? I was thinking about you on that. Hey, Elias, good to see you. Yeah, very nice. Yeah, that was a lovely little run on that dollar strength. A little bit of happiness. Sadly, though, it's a very sad geopolitical situation. Now, before we get stuck into the session, particularly for those who are new, what we focus on in these daily macro sessions are looking at the macro fundamentals and understanding current sentiment. And that's what informed us with our trades this week. And before we get into today's market, right, remember there's 5 core elements to good trading. One, trading psychology. You always need to ask yourself, should I even be trading right now? Trading's very emotional and you're not always in the right frame of mind for trading. Secondly, you need to know the macro fundamental bias. Thirdly, understand the sentiment. Fourth, and this is what I focus on, is technical execution, keeping entries simple, repeatable, risk minimal. We'll look at the euro dollar in a moment and see that was a potential around 36 to 1 winner. So I'll outline that in a minute. And fifth, risk management. You remember, we don't cover it in this session, but you need to look at it. What your position size is, what your downside is before you enter. You never want to be entering a trade not knowing where you're going to exit. And remember, that's the big issue with macro fundamentals. And if you are new, make sure, right, all of this session is based on macro fundamental understanding, right, with technical know-how. So you need to go through this course to get yourself up to speed and to make the most out of this session, okay? So make sure you go through that. But remember, the big weakness with macro fundamentals, and it's why some people shy away from it, is that if you don't manage your risk, you can end up being right on your macros, but you just got your entry and your timing wrong. Very common. And sometimes the market can be irrational. Say there's a clear reason for dollar strength, but yet it weakens, right? And if you've just entered without any stop in place, it can just keep weakening, and you're expecting it to strengthen. And then you might add into it, but it just keeps going lower. And then you reach your maximum pain point, you close out your trade, and then see it all turn around, right? That's very common. So that's why you've got to have a very solid technical understanding. Better to re-enter, right, multiple times if necessary, than to be having like one large, calculated loss. Just think of that. Hey, Najam, good morning. Now, in terms of daily preparation, there's a few key resources we use every day. Firstly, the newsfeed Squawk. Right, this gives you, let me just do. This gives you real-time information, context, and early clues about sentiment. And in the morning, you should be always reading through this and listening to the Squawk to get a feel for how the session is shaping up, right? From about sort of 6:30 is when you really want to get stuck in. And we'll look at this in a minute. I'm relying a little bit less on the opening news at the moment because the narrative's so clear, okay? And the options are so obvious at the moment. Secondly, we look at our tools, we look at our economic calendar, and particularly we're looking at the high and low consensus. That's going to be helpful when we look at the ISM PMI print later on today. That can move the dollar and move equity markets, so we'll check that. The interest rate tracker as well, which gives us a real time pricing in the short-term interest rate market, so what's expected about coming interest rate moves. That can sometimes give us a good trade in and of itself. And also we look at the implied volatility tracker. Now that helped us yesterday with our euro dollar target, right? Yeah, thanks for the chart, Stephen. I'll check that out in a minute. Gold. Right. And remember, when it comes down to macro fundamentals, there's really 3, right, key principles that you need to know. And let's just pull this image up. And it's this. You want to know what the baseline that's expected, what a surprise will be, and has it changed the bigger picture. That's always what you're looking at. What's the baseline? What's the surprise? What's changed? So at the moment, what's the baseline? Sort of a 5-week protracted war in Iran between the US and a spillover to Middle Eastern states, resulting in oil supply being disrupted and inflationary pressure going to the macro. So all of it. So what would the surprise be if US Donald Trump says that's the end of the war tomorrow or today? Then you're going to see a massive turnaround quickly. You see the dollar weaken. You're going to see equity markets soar, and you're going to see gold prices plunge. Right? And has that changed the bigger picture? No, it hasn't changed the bigger picture. So you should probably just go back to the price that we were before the crisis. Okay, so that's just an important element to be aware of. And don't forget as well, right, that we get our daily brief. And it's worth looking at the daily brief. We don't always cover it because essentially what the daily brief is market analysis from another analyst. Okay, very decent analyst I've worked with back at FOREX when it was FOREX Live before it changed its branding and its name, and you get some great trade ideas here. So you can see the trade ideas. You know, euro dollar short, what we were looking at yesterday, Aussie US dollar, New Zealand US dollar shorts, Euro Swiss franc longs, gold.
Further from Saudi themselves on that Ras Tanura refinery. So Saudi themselves say there was no damage at the Ras Tanura refinery following on from the most recent incident, with the defense spokesperson confirming there was an attempted attack on the refinery. Again, it just followed those source reports which did intimate.
So what you get in this daily brief, right, is a clear summary of what's happening, the key themes driving the session, and important levels to be aware of, as well as some potential trade ideas, right? So it's not noise, it's just a structured walk through the day from a different viewpoint. Always good to check out different viewpoint. Yeah, that's it, Mark, investinglive.com. I was an analyst with them for a number of years, and the chap who did this has just gone on and started his own thing. Right? So the reason we look at all this, right? The daily brief, news feed, score, calendar, rate tracker, volatility tools. It's so you can see the entire macro and sentiment framework we use right from the start of the session. Right, that's the whole philosophy. So let's move right into today's session. So what are we looking at? It's very similar to yesterday, right? Asia Pacific stocks extending losses with markets raw by the widening conflict in the Middle East. Kospi saw a double-digit percentage drop and triggered a circuit breaker with declines led by shipbuilding and shipping firms. Circuit breaker is we'll look at that in a minute, Elias. Circuit breaker is designed to stop selling becoming out of control, right? It just stops the market, stops access, and allows the market to gain a little bit of composure. All major indices have that that circuit breaker in place, and it's only triggered in times of acute distress. We don't need to really look at these headlines at the moment because what we're looking at, we were tuned in yesterday with the main story. You got this big surge in government bond yields across the world. So what's happening is investors are seeing this big surge in oil prices based on the Middle East disruption. And they're saying to themselves, higher oil prices means higher inflation. So that means that central banks will not be able to cut interest rates in the way they'd hoped before the conflict. Price shock. And that's what we're seeing across the board. So that means equity markets are selling off on that price shock. Now, Europe was hit twice through the fact that inflationary pressures are coming through oil, but two, it's a net energy importer. So all of a sudden, those interest rate cuts and the ECB, staying flat, there's a potential for, will interest rate hikes coming back on the table? Oh no, we've been pricing in for interest rate cuts. Now that looks a mistake. And Europe is a net energy importer. So those higher oil prices are going to hit particularly Germany's manufacturing sector, right? Sell. The US, right, is a net energy exporter, produces the most amount of oil and shale in the world. So it wasn't hit with that. And yes, yields were moving higher. But then Donald Trump yesterday, he said, "Oh, we could maybe escort oil tankers through the Gulf. We'll get the Straits of Hormuz working again." So Donald Trump, for all the criticisms he gets, he understands the market very well. And that was exactly what the market wanted to hear. And that's why we saw yesterday, I don't know if you were, it was around sort of, European afternoon, we saw that headline coming in and oil market dropped. Now they have been building,
Kremlin announced that Putin will hold a
right? The oil markets have still been building higher because that hasn't happened what Trump said would happen. So markets want to see evidence of it, but there's clearly relief, right? And look at that dip that was being bought in US equity markets. And you remember yesterday, we were looking at this technically with the TP. If you were just looking at this level, we were looking at that retracement and then a sell-off from here, if you remember, with the value area low. We had a break through that value area around the time of the session. It was coming over here. We're looking for a pullback and sell-off. So you see we've got that pullback, sell-off, but now we've gone back above that level. And the market's clearly, you don't need anything to see it. You can just see it's a false break of that, rejection, ongoing rejection, right? So we're not going underneath that level. You see the price closing above that level, that's a false break. So that goes off, right? That was intraday option, that goes off. And now what you're looking at, it's like the market wants to do that. That's kind of the outlook, right? So you put that all together. What does that actually mean? Well, it means that yields are still high. Oil prices are still high. So that means dollar strength is still the name of the game and can still be reasonably expected. So yesterday, we'll have a look at the euro trades in a minute. Yesterday, the euro dollar hit its target at that 1.555 region, right? Hit it perfectly. And then there's still a bias for dollar strength in the current market conditions, right? Because of the yield situation, because of high oil prices. That should all support dollar strength. So that's the number one narrative for today, dollar strength. Now, having said that, this is also quite possible that that's the end of the dollar strength and that this is a bottom for the euro dollar. So we're going to look at that narrative as well, okay? This is the potential that we've had a bottom in yesterday. Looking at currencies, right? We've got Antipodean, New Zealand, yen strongest, Swiss franc the weakest. There's reasons for that Swiss franc weakness. We'll look at that at the moment. So let's just go and look at the sentiment and see what's going on in terms of FX. Antipodean mixed with Aussie, despite the better than expected Australian GDP data for Q4, which topped forecast. So the currency failed to benefit from the risk-off mood, and given that data was prior to the RBA's right more than 2 years. Right, there's nothing being mentioned here about the New Zealand dollar. Let me just check. Just going to check there's nothing from the RBNZ. And this is for your question, Elias, which is a good question. Why is the New Zealand dollar strongest today? It is hot. There's nothing being reported here. There's nothing from the RBNZ out. Let's see when that strength came in. Strength came in overnight from 115. So it came in around the Chinese data. Yeah, what is the reason for that New Zealand dollar strength? Just going to check another source that I've got here. No, there's nothing jumping out at me. Nothing jumping out at me, Elias. If I see something, I'll let you know. But I can't see an obvious reason for that New Zealand dollar strength. Does anyone else have any reason for that New Zealand dollar strength? Please do let us know in the chat. But there's nothing there that's jumping out at me. The things that are jumping out at me is this comment with a Swiss inflation, right? So a little bit of Swiss franc strength on slightly firmer inflation, but then we had these comments again from the SMB that they are prepared, right, to intervene in the FX markets. In other words, they're saying don't go buying the Swiss franc, everybody, because we'll intervene to stop it. So they are more prepared to intervene in the FX market in the current situation. That's where the Swiss franc, you notice normally the Swiss franc would gain in risk-off trading. And look at you look at the Swiss franc yesterday in particular, it was very, very weak, right? And the Swiss franc was just falling, even when like the dollar was rising and the yen was rising, but the Swiss franc was falling. So you see that? That's weird. And it's because of intervention. So that gives us a euro Swiss franc upside bias because of the risk of intervention from the SNB, right? So that just gives us pressure on the Swiss franc. So we'll look at that. Aside from that, the only other thing that's coming up is the ISM print coming later. And what we're looking for here is particularly the prices paid index. If that comes in high, 66.6 or higher, that's inflationary pressure and that's dollar positive. The PMI print, if that comes in very strong, that should be equity negative and dollar positive as well. So if this comes in hot within the range and that comes in 66.6 or higher, then expect dollar strength, euro dollar weakness. The ISM is an important print. It's just playing second fiddle to geopolitics at the moment, but we can't ignore it. So be aware of that. A hot print should be dollar positive and euro dollar negative. So putting that all together, let's just take a look. So first of all, that euro dollar short from the start of the week, you can see that we got a near perfect entry and target was the 55, hit yesterday afternoon, and you can see there that was a 36 to 1 risk reward, right? So a very decent trade. So even on 50% of the position, it was an 18 to 1 risk reward. So great tradable opportunity there. So that can go off. Now, technically, what do we see here, right? Right, euro dollars hit that that third standard deviation from yesterday, and this is a potential bottoming area, right? Is there any reasons for more dollar strength? Yes, it's a dollar strength environment, but we've had that stretched now. So what I'm looking at here is two options, and it's based upon the implied volatility levels. If you look at the euro dollar, that's right, TM, yeah? And you remember, we were short, yeah, it just overextended. So I'm looking at trading the extremes of the euro dollar today. So I've got a buy and a sell bias, depending on where we go. Again, moving using very tight stops, right? So I'll just show you what I'm looking for, right? So first of all, you got that 4.7 area, the standard deviation low, right? So that 5.47. That means if I do get back down, I think that's probably a stretch to go 4.7. So what I'd look at is a liquidity grab here at the 7.4, right? So I'll be looking, it's possible to go long or short here, okay? But I probably favor a potential long from this area here, the 7.4, which is a bit over. But at the same time, if we do get back up to this 6.72 region, I think that's a reasonable area for shorting from. So they're the two areas that I'm looking at, right? That's an obvious kind of swing point here at that 6.72. So if we go up to the 6.72, right, long above, short below. So it's kind of a two-way price. Here, just long above, right, just looking for a push up higher. So that's what I'm looking for in the euro dollar. Again, very tight stop, try up to 3 times, and probably more like a sell bias from here. So buying from below, selling from on high. Okay, that's my outlook for euro dollar. Gold, again, looking for selling opportunities. And what I'm looking for here, using the implied volatility level, is you got this 5215 region, first standard deviation high, which coincides with this very nice daily trend line that's been broken. See, daily trend line break, right? So that's a potential trend change. And you can see here that 5215 region is in line with a retest of that trend line. So that means try up to 3 times, I'll give it a $12 stop. It's a bit more volatility, try up to 3 times short from there. Is Brian here today? Oh, okay. But remember what we were looking at yesterday, Brian, with that rising window. Do you remember we said that rising window, great area for longs and great area for shorts. So the rising window is when we gapped higher at the open with a geopolitical risk. We had a movement into here, We're able to get long from that environment, right? You can see there's another long environment there. And then yesterday we said, look, this like support now becomes resistance. And so yesterday we moved into that and sold off. I think Brian got that yesterday. He was talking about it in the futures session. But again, it was, a nice little area. So just mark that. Guys, it's one to note when we have a rising window, put in the bottom tiny bit of the pane and have that as your hot zone. So you can see what we're looking at. And it was on Monday, we had this marked in, right? We were looking at longs from here, right? So long, right? $7 stop, got a great trade there. And then you do the opposite once you've broken through that level. And then once you've got the opposite, again, short, your $7 stop, try up to 3 times. And you see, look at that move, right? So if you got onto that, you could have got another 20, 30. See what I mean? So just in a couple of those trades, you could have got 60, 40, 50, 60 risk reward. So you see why markets love volatility, because it creates opportunity. So for today, same story, but the 5215 is the entry with a $12 stop. Just give it a little bit more room and try up to 3 times. So that's the other outlook. Oh, I'm just going to see what that's moving quite quick. Just going to see if there's a headline there. Support's holding, right, that's dollar positive. Now, what we're looking at now, euro dollar short from there, 672. Looks very attractive. Yes, this is what I wanted to show you. This SMB vice chair comment that's come out, right? They will prepare to intervene in the FX market. So let's look at volatility for the euro Swiss franc. Let's see a natural turning point.
Elsewhere, just another piece in the New York Times, this time on the geopolitical front.
903.
It's entitled that President Trump is beginning to consider what sorts of Iranian government might come next. Within it, they do highlight that US officials are skeptical, at least in the short term, that either the Trump administration or Iran is actually ready for an off-ramp, according to the officials cited.
Right, what we're looking for here, let's put the euro Swiss franc up. Let's just do a quick technical rundown on it. Yeah, okay.
So in terms of the specifics in this, the article does highlight that a day after the attacks began, operatives from Iran's intelligence ministry did reach out indirectly to the CIA with an offer to discuss terms for ending the conflict, according to the officials. But again, US officials are
area
prepared for an off-ramp in the short term at least.
So what we're looking at here is any retracements down to 903.
The New York Times does surmise that for now the offer is
not
that level to be serious stateside.
903.90325. Yeah, basically it would be there. I wouldn't take anything other than that.
Back to the New York Times article on FOREX. So while she does say it's too soon to determine the economic impact of the Middle East situation, she does highlight that the escalating conflict represents a new inflationary risk.
So 903.25. That's the only option I take, right? It is right the best option, but the only one to try up to 3 times at that 903.25 because it's a standard deviation area. And so yes, the Swiss franc was weak yesterday, but it's still going to have pressure for strength. So again, it's fading extremes, looking for any liquidity grabs, going back through there and then back up. All right. Just notice Bitcoin trying to break out of this structure, just technically significant. Oil moving lower, that's good for risk. Euro pound continue its way lower. Remember the differentials between the ECB and the Bank of England. Bank of England much more vulnerable to inflation shocks, more vulnerable to energy inflation shocks than the Eurozone. Yet, because of the Euro's exposure to oil prices, and it's a net energy importer, the Euro's losing value against the pound. So I will look at getting back into this Euro pound long if oil prices go down and this calms. Otherwise, out at break even and looking for a fresh opportunity.
To be headed for defeat today, as there is still a question of whether any other Republicans will join Senator Paul in supporting it, according to the sources cited.
Okay, folks, that is it for today. Be careful being just caught out by headlines. The thing that I'm reminded to say is remember the taco trade. Trump always chickens out. Yesterday he was sort of saying, "Oh, this could be over in a few days," So for our perspective, it means all of a sudden, the war can be over in like 2 days and everything's back to normal, or it could be a prolonged affair. So we're in this uncertainty. But remember, generally, the taco trade has been the one Trump always chickens out. But remember the thing to look for. Well, that's interesting here. US officials report skeptical that Trump or Iran is ready for an off-ramp in the short term. So sentiment at the moment is there's no off-ramp, but just keep your eye. I would just keep your eye on oil prices and government yields. Right? Yields higher, oil prices higher, dollar strength. That's the narrative. Oil prices, yields high, dollar strength, and that's going to pressure equity markets lower, particularly in Europe. And big energy exporters, importers, so Europe, Japan. Now, I hadn't looked at that TM. Good article. I'll maybe check that out later. The general rule of thumb is you buy the dip, right? That's the general rule for conflicts. It's too premature in my mind just to I'm just gonna buy this dip, but that's generally the approach. And over a long term perspective, this is a decent dip to be buying. So like if you've got major indices and like a pension or something like that, you would buy into this dip. For our perspective, we're obviously much more short term, but the taco trade is still the one I'm thinking of. But just keep your eye on oil prices throughout the day, right? What's going on with that? And look out for oil headlines, look out for news about the Straits of Hormuz.
The equity landscape in the last 5-6 minutes or so. There's appears to be following on from that New York Times report, which, while US officials are skeptical about either side being willing for an off-ramp, does appear as if Iran's Ministry of Intelligence did reach out to the CIA a day after the conflict commenced. So again, it does appear as if that what appears to be a bit of an olive branch is perhaps supporting the risk tone a touch.
Yeah.
Seen a bit of a pullback in the energy benchmarks as well.
Right, equity markets are rallying on that. Quite a bit of a rally there. Do you see? So this could unwind quite quickly, and the trade is euro dollar long would be good, and equity market buying. Okay, folks, that's all for now. Take care and look forward to seeing you later. Be careful out there. See you soon. Bye.